Folks, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hoy, your social media insurance broker, back today to weapon tap on your head with another ADH wealth solution. Today we're going to look at a private face group I belong to called Life Insurance Agents, where there's a lot of buy-term invested rest, people who love IULs, people who hate IULs, so on and so forth. This gentleman here, Brian Jarrell, I'm trying to get him to go back deeper into social media and maybe come here on TikTok. Make sure to hit that like, drop a comment, subscribe, and hit that notification bell. And as always, share. Apologies for the lengthy post, but it's hard to get a point across without going more in depth. This will be part 1 of a series. Feel free to tag anyone in the comments who is looking to better understand how these policies work. Someone asked, can someone please explain to me IUL policies so I understand how they work? I'm a visual learner. I've been researching for days and can't find anything that makes it click. If anyone has any books or podcasts or any tools to help me, I would really appreciate it. Part 1. Understanding net risk. An IUL is an index universal life insurance policy that, when utilized for cash value, is an amazing vehicle. However, when it's used for the actual purpose of life insurance, I will recommend against it, as the guarantees in the contract are not as strong as term, whole, or guaranteed universal life. Pause. So this is very true, ladies and gentlemen, and this is the major issue. When people are selling you life insurance, they're just selling it to you for the death benefit, which is why they're telling you that an IUL is bad, which in that essence it is. But the wealthy insure one life at least 7 times, meaning they get 7 life insurance policies on one person throughout their life. And so there's a multitude of different reasons. When dealing with a max funded policy, you want to make sure the death benefit is the absolute smallest it can be based on, oh shit, there's an Internal Revenue Code, IRC 7702 guidelines. You can usually achieve this through an increasing death benefit where the funding is matched by the guideline annual premium, also referred to as the guideline level premium. Once the client is no longer funding, you'd want to switch it to a level premium. Next thing to understand is we want to maintain the lowest costs and fees throughout the policy as possible. To do so, you must understand net risk. In an IUL, there are 3 functioning parts. There's the cash value, the net risk to carrier, and what the IRS refers to as the net death benefit. It is also important to understand that the policies are built on an annual renewable term, also referred to as ART, which means you pay for the current cost of your current age. Well, as we get older, what happens to the costs? They rise. Therefore, the cost per $1,000 or unit of insurance goes up. Well, we can mitigate these costs by better understanding net risks, as well as why we want to keep the death benefit as small as possible. Now, the IRS really does not care, for the most part, if the net death benefit is comprised up as your cash or net risk to the carrier. So let's say you want to put X amount of dollars into a policy and the IRS comes back, requires a $500,000 net death benefit. Well, day 1, we don't really have much cash in. Therefore, if you have no cash, the net risk falls solely on the insurance carrier, meaning if you die, the insurance company would have to pay out $500,000 of their own coffers. Now, let's fast forward and say you have $100,000 of cash value, but the IRS is still requiring a $500,000 net death benefit. Well, this means you own $100,000 and are now only paying the net risk to the carrier of $400,000 to equal the $500,000 the IRS requires. Well, now that we have shrunken down our net risk to the carrier, we have balanced our costs. Even though the per 1,000 goes up, we mitigate it by buying less and less over time. Fast forward again. Now we have $400,000 of cash value. This means we only need to purchase $100,000 from the carrier to satisfy the IRS total net death benefit of $500K, meaning we have once again lowered our overall costs. Now, in a perfect world, we'd have $500K in cash and have no net risk to the carrier to satisfy the $500K net death benefit for the IRS. While this can happen, it is not allowed until age 95. So the IRS will force something called a corridor based on your age. Let's say the corridor is 10%. This means if you have $500,000 in cash value, you're still required to maintain $50,000 of net risk to the carrier, which means our net death benefit is now $5,500,000. But are we paying for $5,500,000? No. We're only paying for $50,000 at this point, which means even though the cost of $1,000 per $1,000 goes up, we now only have to buy $50,000, which lowers the cost substantially. These corridors are based on a particular age as well. So as we get older and those costs rise, the IRS allows us to shrink that corridor. For example, a 37-year-old may be required to have a 250% net death benefit, which means if you have $100,000 of cash, the IRS will require you to have a $250,000 net death benefit. However, you own $100,000 of it and are only paying the net risk to the carrier of $150,000. Fast forward to age 75. Now you're only required 105% net risk, meaning if you have $100,000 of cash value, you're only required to have $105,000 net death benefit, which means you're only paying the insurance carrier for $5,000 of net risk. Well, even on a guaranteed cost basis, that would make the cost of $5,000 around $200, which means you would only need a 0.2% return to cover the cost and fees. I've attached an image from an actual contract better explaining corridors as a visual aid. It is important when cash value is our goal. We want to minimize that net risk to the carrier as much as possible based on the 7702 tax code corridors. So this covers net risk. Hopefully this helps to better understand the IUL a bit better. Part 2 will consist of the overall bad publicity which the IUL gets. So as you can see here, there it is. Wipe ass, work in progress every day and see success. Salute.